Hey guys, welcome to the channel. It's Hamza, and in this video, I want to talk about the CEO of Robinhood and what he said and what the consequences of what he said could be for the company, for him. I truly believe that after this interview, things are going to change. Robinhood may also need to actually think about or consider changing their CEO just because they are going public soon. But I want you guys to see this commentary and see the message that I am trying to send out there for everybody to hear. So let's get started really quickly with the interview with the CEO of Robinhood, and let's see what he had to say right before all this happened. So this interview happened the first day right after Robinhood started restricting those trades for us retail investors.
The CEO of Robinhood, Vlad Tenev, is with us right now, and we appreciate you joining us on a day where there are so many questions. And as Melissa just said, there are, frankly, as you know, a lot of angry customers out there and a lot of questions about what took place and the decisions that you made to limit so many of your customers' ability to buy stocks like GameStop. Questions about whether you have a liquidity problem, whether you're trying to protect them from themselves, whether Citadel did this. Explain what happened today.
Thank you for having me on the show again, Andrew. So what happened today was, as you pointed out, we had to make a very difficult decision. It's been a challenging day. We made the decision in the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them, and they could also trade in the thousands of other securities on our platform. So it was a difficult decision, and that's what we had to do as part of normal operations.
But explain then, why did you do this?
So I just want to pause there for a second. Extremely vague, not confident at all. It almost feels like he himself, the CEO of Robinhood himself, doesn't know what exactly is going on. And that's the impression that I'm getting. If you guys are getting a different impression, make sure you put that in the comments below.
Did the SEC call you and tell you you had to do this? Was there a problem inside the company in terms of liquidity, in terms of the amount of deposits that you had to put it in front to the exchanges? What led to this?
Sure, and let me explain exactly how this works. First of all, I want to address some of the misinformation that's been out there because there's a lot of it. We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants. The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them.
Now, I want to pause here really quickly and remind you guys to remember what the CEO of Robinhood just said on CNBC to Andrew. His response was that this was done preemptively, and in fact, this was to protect investors and not Robinhood. So let's keep listening to what he has to say.
And we're doing what we can to allow buying and to remove these restrictions in the morning. But also, you might have seen Robinhood has been the #1 app in the App Store overall. So we have seen unprecedented interest due to the fact that finance has been culturally relevant in a way that hasn't been before, and these stocks are going viral on social media. And I think it's really interesting to juxtapose against some of the other questions that we've been having before this. Of course, Robinhood stands for everyday investors. From the very beginning, we have stood for investors, opening up access and giving them the ability to trade commission-free in whatever they want. And we've gotten a lot of criticism that, maybe there should be more restrictions. So it pains us to have had to impose these restrictions, and we're going to do what we can to enable trading in these stocks as soon as we can.
So basically, that was the interview day one. This was the day that Robinhood kind of shut everything down. And then this is what I want to bring to your attention. So this was the very next day. So no liquidity issues according to the CEO of Robinhood himself, right? And then the very next day, we get an article that literally says Robinhood raises $1 billion to meet surging cash demand. So to me, it did sound like there was a liquidity issue. I felt like the Robinhood CEO was a little vague in his responses to Andrew from CNBC. And I'm sure that there's going to be a lot of videos out there criticizing the CEO of Robinhood. Now, you guys need to realize that the bulk of the traffic for GME, AMC, Nokia, BlackBerry, Bed Bath & Beyond was coming through Robinhood because of the Redditors mainly using Robinhood. So that's something that I do understand. However, when the CEO comes out and explains something and puts it to the we are not letting you guys trade because we want to protect you. So they are limiting orders to tell the retail guys that they are trying to protect us, when it's very clear that Robinhood did have a liquidity issue. That's something that he should have said in the interview, and that would have been the right thing to do. So very next day, we come out with this where they raise $1 billion to meet the demand, right? So this is what they're saying. And the way the media put it out there, so obviously Robinhood did go out to the media, and the way this was put out there is that this was an additional raise to what they had. But it's very obvious at this point that Robinhood did have a liquidity issue. That being said, today is January 30th. It is a Saturday. I don't think Robinhood is done. The Redditors are going at it. We're looking at silver. We're looking at Bitcoin. We're looking at other stocks. There's people holding shares and continuing to buy shares. And I do believe that Robinhood is going to see limit trades in order to be able to meet with the demand. So I think there is a liquidity issue. I think there's going to be more of a liquidity issue. With that being said, I have been seeing a lot of Tastyworks ads right here on YouTube, and I click on other videos on Robinhood. So I do think that Tastyworks is trying to get market share, is trying to take an advantage here, and I think rightfully so. A lot of people leaving Robinhood right now. What better time to advertise your platform, whether if you're Webull or Tastyworks, than right away. So this is another video that I found, and I wanted to share this with you guys. Just because I think that he did a really good job responding.
That Wall Street's been conducting business for the last 20 years and not want to be part of that club, or is this all part of the democratization where finally they embrace the way that Wall Street does raise capital for companies?
I think they're angry because they were shunned for so long. But you have to recognize there's something great about what's happening now. Take yesterday and just throw it in the garbage out of context the last couple of days, because again, that's just the underbelly, the defining moment type thing. What's really happening here is that instead of finance waiting instead of people turning onto finance or becoming engaged in finance when they're 40, 50, 60 or whatever, they're finally starting to learn and figure out, hey, this is really cool. And so we have an entire generation now, which is not only going to support capitalism, it's going to accelerate the growth of free markets and capitalism and massive amounts of liquidity, so that, everybody out there is going to benefit. I mean, you're going to benefit, I'm going to benefit, the private equity is going to benefit, and all the markets are going to benefit. This is the best thing to happen to kind of the global economy in, I don't know, I can't even, probably in 3 or 4 decades. So this is a massive move that I don't think can be reversed. You're not going to see situations like the perfect storm of what happened in GameStop or something like that. You're not going to find a company that's, that's in a situation where it can create that kind of like a disastrous panic to the upside. But I think that in general, the move of getting young, not necessarily kids, but millennials engaged in finance is transformational for sure.
Hey, Tom, we've been talking about.
So I wanna just bring something to your attention, right? Before the CEO of Tastyworks responds, he actually sets a precedent and admits, well, not really admits, but says that these are unprecedented times and brings out the positive. This is before he responds to the question that was asked to him. Now, after he says that, he's going to answer this question. And that is something that I wish I saw from the CEO of Robinhood at the time.
This conversation that I had with Vlad last night, all morning, we talked about trying to find this clip about this liquidity issue itself. I want to play it to you right now and just get your reaction as somebody who's in the business, who understands the dynamic at play.
Sure, go ahead.
There was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions in the morning.
Do you look at this as a liquidity crisis?
I listened to this interview. It was done quite well. And I understand where Vlad's coming from with it. I think that it was more of a regulatory crisis than it was a liquidity crisis, meaning that I do believe that they had pressure from regulators that probably came in and said, listen, we just want to make sure you have enough net capital to support, everything that's going on here. And I think that if you're asking me, and I don't know, because it's like asking the coach of the Chicago Bears what you think about the Green Bay Packers quarterback. But I think that if you're looking at the situation, I would say they probably panicked a little bit. And you don't ever want to shut down trading. But I don't know if that had to do with risk. I don't really know, anything about their technology. So it's really hard for me to say. But I think it was a little bit of maybe a panic, but we'll see. I'm not sure.
I just wanted to bring this to your attention. I'm going to post this video today. Today's Saturday, January the 30th. Not many people are talking about this, but I do truly believe that the current CEO of Robinhood is going to step down because that company needs to IPO. And for the greater good, I really believe that the way that interview was handled was not at all professional, not correct, and not directed towards the retail investors at all. I'm going to keep you guys updated as I get more information. Once again, my name is Hamza, and I'll see you guys next video.